Let's get these markets opened up for you here on a Monday, and then we'll bring in Dewey Strickler of Ag Watch Market Advisors to talk about what is taking place. Let's go to the corn, and first of all, with our quotes provided by Bar Chart. Remember how we were trading 3 to 4 cents higher overnight in the corn? We are opening up this morning with the May corn down 3 1/4 cents at 5.42 1/4. We had a high last night of 5.56 1/4. So 14-cent turnaround from the high last night to where we're opening up here this morning, and we're almost on the low. We are within 2 ticks of the low of the range. December corn, the new crop contract, is down 2 1/2 cents. Make it down 2 3/4 now at 4.78 3/4, and that is now on the low of the day after a high last night of 4.85 3/4. So we have a definite turnaround going on here in the corn market this morning. Soybeans were sharply higher overnight. Now we're opening higher today. May is trading 7 1/2 cents higher at 14.37 1/2. But you have to keep in mind that we had a high last night of 14.60. So we are, about 24 cents off of that earlier high last night. And still higher, but it looks like we're eroding as we go. Every time it ticks a little bit lower the way it seems. Now we're at 5 3/4 higher on the May. September up 6 3/4. Let's move on to the wheat. How are we opening up in Chicago with our quotes provided by Bar Chart here? Let's go check out what's going on, for example, in that May contract. We have it down 4 3/4 cents. We're at 6.48 1/4 after a high last night of 6.62 3/4. In Kansas City, the May contract 7 3/4 lower at 6.18 1/2 on the low of the opening range and the overnight trade. We're off our overnight high by nearly 17 cents now. Spring wheat trade is opening up with May down 2 1/4 at 6.43. So let's talk about this. Let's go to Dewey Strickler. And Dewey, as you take a look at our market open here this morning, there's a lot of slipping and sliding going on here. What's the deal?
Well, I'll tell you what, if you look at last week, Marlon, the trade is pretty well expecting to see USDA lower the numbers here on corn and soybean ending stocks here somewhat. Not a great deal amount. But guess what happened at 8 o'clock this morning? We have no sales reported. So I think that's a disappointment, and that's why we're seeing these markets back off.
Now, as far as delivery intentions go, we've been tracking the March deliveries here lately as well. And we got an update here this morning, and let me take a look here. It looks like we had Kansas City wheat contracts posted for delivery, came in at 19 contracts. And we had 2 of rice, 2 of oats. Not much to talk about there. Still no deliveries of corn or soybeans at all. And that seems kind of interesting. Apparently, they want to hold tight to that.
Yeah, we do have tight stocks here, especially on old crop here right now. And that's why you're just not really looking at the deliveries.
When you look at the WASDE numbers coming up tomorrow, what are you going to go to first? What do you think has the most potential impact here?
I think, first of all, USDA told us, especially in corn last month, that they're just going to make some very slow, gradual adjustments lower. So I think that's what we can expect in corn. And soybeans, I don't think they're going to be making much in the way of adjustments here. I think what the trade is really going to be looking for is South America's production here. We have some private sources have raised their estimates on soybeans, and they've lowered them here on corn. And I think we're going to be looking at the trade here to see whether those numbers still jive.
One thing I want to take a peek at here this morning before we get into the break is what's going on with the energy markets. Of course, we had an attack on a Saudi production facility over the weekend. Caused a spike in futures for a while, but right now we have the April futures on West Texas crude 40 cents lower at 65.69 per barrel after a high over the weekend of 67.98. So we are off of that by about $2.27 right now. Lots of stuff going on there, but currently lower for the time being. We'll come back, and Dewey will open up our livestock trade as well right after these messages. Come on back. Let's go back to Dewey Strickler of Ag Watch Market Advisors, and we'll find out what's going on here in our trade. We'll start with our live cattle market here this morning, Dewey. And we had a higher market heading into the weekend. We are opening a little bit higher, not very much, April is trading 15 cents higher, now at 119.17. June 27 cents higher, and we're at 118.27. Now the far out deferreds are just narrowly mixed. On the feeder cattle market to get things rolling today, same story. We're a little higher on the nearbys, weaker on the deferreds. April 55 cents higher, now at 139.57. You have the May down 22, and August slipping by 42 cents right now at 153.30. And that's right in the middle of its trading range here so far today. Lean hogs. Here is a story on lean hogs. Everything mixed and not doing much at all. April down a nickel. We're at 87.12 per hundredweight. You have May up 7 cents. And now we're at 89.47. The June contract down 7 cents at 95.35. Basically, they just kind of cancel each other out, and it's about neutral on the day. So what do you read into the livestock trade, and what are you watching for here this week? Because the cash cattle market, for example, hasn't done anything for about 5 weeks now.
I'm not have anything in particular that I'm looking at. I know that the cattle market, of course, we got a pretty large supply here, and we're looking at cut out a little lower for the week, production higher, but trade's expecting to see maybe a stronger spring demand. Maybe that will come, maybe not, but we're in a pretty solid downtrend here in the cattle market. We're due to get a bit of a bounce here, but you might see this cattle market back off down to the 117, 116 and a half area before this current decline is over with.
Dewey, I see we're on the commodity fund positioning that came out Friday, the Commitment of Traders report. As of last Tuesday, you know, the commodity funds had been holding pretty big net long positions on cattle. Looks like they lightened up by about 7,500 contracts last week. And on the hogs, they actually bought about 1,300 contracts. So now they're net long on hogs, about 74,000 contracts. What does that mean to the overall makeup of that market and how susceptible it would be to a correction anyway?
Okay, on the hogs, we had a little bit of a bounce here, so I can see the funds coming in and maybe adding to a few longs here. When I look at the pattern on the hogs, hogs look like the April contract will get back above the $91 level.
91, okay. Now, what about those deferred contracts out there that they have been getting at pretty lofty levels here lately? Do they have a lot of upside potential or not?
They've got some upside potential. I don't know that they have as much as what the nearby contract has.
All right, they're already at a steep premium by about $8. Well, thank you, Dewey, for talking with us today. Appreciate it, sir. I'll let you go for now. Dewey Strickler of AgWatch Market Advisors. He is based in Franklin, Kentucky. We're off and running. Janet will stay on top of the markets for you.